Today, a quick investment case video on Boulevard in Birmingham and why it is such a compelling investment case for international investors. In addition to the stamp duty saving, I'll be breaking that down in terms of what it means to the numbers and exactly what it does on investment for clients. Just to touch on our company and how we fit in, we offer an end-to-end service, been operating since 2012, really with the mindset of acting as a one-stop shop, enabling clients to access the global real estate market. Currently, we've got 16 offices, strategically located globally, ever expanding, partnering with the likes of St. James's Place, some of the largest family offices, institutional buyers globally, offering an end-to-end service in the UK real estate market primarily. What do? We, as I say, act as a one-stop shop, making a hassle-free, hands-off process for buyers that want to access the real estate market outside of their home country. Typically, investing overseas can be quite complex, quite difficult, quite confusing. It can be quite laborious. We make it simple, easy, and hassle-free for clients, quite literally holding their hand throughout the whole duration of the process. We want clients to be able to view buying real estate the same way they would buy any other asset class. So a stock, a share, an ETF, for example. They press the buy button, they sit back and they watch their investment grow. That's exactly how we want property to be for our clients. Hassle-free, hands-off, and a one-stop shop where they don't need to speak to anyone else for anything along the whole journey. Where does it start? With our dedicated research and due diligence sourcing team, making sure that any projects, developments that we bring across to our partners and clients have been thoroughly vetted, the financials stack up from the developer. Often we've worked with these developers on a number of different projects, and this is the exact same with Investing PLC, which is the Birmingham scheme. And we make sure that ultimately that we believe there's an investment case and an investment story that clients can see an ROI on their investment. That's the research and the due diligence piece. In terms of the investment advice, we produce videos like this. We go through cash flows with clients, and we make sure that any buyers have a complete understanding of the financials involved, but also the investment case behind where they're buying. And that's something that we help and support with to make sure clients are completely comfortable and happy before they do move forward with purchasing anything. Once they do move forward with purchasing, that's often where I find other companies, the process will stop. For us, that's very much where the process begins. So we have a sales progression team acting and solicitors acting for both buyer and seller, which makes exchanging contracts and completing very smooth and simple. Again, they're there to hold the hand of the client throughout the whole process. We then have a tax and accounting team, making sure that properties are purchased in the most tax efficient manner. We help clients globally purchase in global jurisdictions, so they can provide advice whether it's better for clients to buy in personal name and utilize the nil rate tax band, or whether it's better to set up simple structures like SPVs or limited companies to help offset taxes. We've helped clients build multi-million pound portfolios through limited companies who pay small single figure tax. Once the unit's complete and ready to have a tenant in, we also have a lettings and management team now managing close to 2,000 units who do everything from tenant sourcing, tenant vetting, making sure the background checks are passed, making sure that guarantors are there if needed, references from previous landlords are provided to make sure that we get good quality long-term tenants. They also deal with the day-to-day management of the property to make sure that Mr. Buyer in the other side of the world isn't getting a call in the middle of the night to say, I've lost my keys, I need a new set of house keys. They deal with the day-to-day management, emphasizing that hands-off, hassle-free approach for buyers. The last piece, and probably the most exciting part, is the portfolio optimization. So we give constant updates throughout the property cycle for buyers, letting them know how their property is performing, letting them know any changes to the rental market or what we can do in terms of increasing the rent. But the main play for me is, say, for example, we helped a client buy a unit that was £300,000, and 5 years later, that's worth £400,000. Well, there's a number of options to that client, and this is what we'd sit down and go through the clients with. One might be sell the unit, crystallize the gains, and move into something else. Two might be do nothing, it's performed well, keep the unit and keep watching it grow. Or thirdly, and the most popular option, is to release the equity, which is classed as tax-free by the government, so completely non-taxable, and use that to purchase another property to build a multi-unit portfolio by only ever recycling the cash. And that's ultimately how we help clients build multi-unit portfolios, just by recycling the equity out the initial property. To touch on our company and the stature of our company, in total, we've now transacted on over £2 billion worth of real estate. Probably 95% of that is within the UK, equating to over 5,000 units. Do excuse that. What makes me so proud is that probably 30-35% of our business is repeat business, meaning that clients who have already purchased with us come back to us and purchase again because they've had such a good process with us and a good experience with us. They want to add to their portfolio. In terms of the UK at a high level, what makes the UK such an attractive market for international investors? One, it's the regulation. It's a very secure, regulated environment. Every body that you deal with along the whole process is regulated. For example, the developer is regulated. The deposits that pay have to be regulated and kept in certain places. The solicitor that you deal with is regulated. The mortgage guys are regulated. The tax and accounting team is regulated. The lettings and management team have to adhere to certain processes and protocols which are heavily regulated. So for buyers, it creates a very secure and stable environment that they feel comfortable buying in. To touch on the shortfall, the government each year releases amounts of new houses that need to be built, and I don't think, as far as I've lived, they've ever come anywhere near building what we need to build, which creates a huge shortfall in property in the UK. That in turn creates a supply and demand imbalance, which has caused property prices to steadily increase as long as we can remember. In terms of Boulevard, the Birmingham promotion that we have, which is that the developer is going to be covering stamp duty for the month of February. And what it actually means, I think, firstly, it might be interesting to touch on why are they offering this. This is a completed development, which for buyers means that there is less risk because it's completed. Some of the building has tenants in already. So in terms of the rental appraisals, it's not a guess of what it might be in the future. There's neighbours next door to the units being sold that is being rented. So we know exactly what it's rented, meaning the cash flows are pretty accurate because we know exactly what it's renting for. So from a risk perspective, it's pretty low risk for an investor. It's built and it's already tenanted. So why is the developer offering this free stamp duty incentive? We have a number of developments that are off plan, and throughout an off plan build, clients often pay in stages. So it might be 5% now, 10% in 12 months, for example. It might be 10% now, 10% 12 months, 10% in another 12 months. So it's staggered throughout the build phase. Well, with completed stock, it's much more cash intense. For example, this development requires 15% now, the rest is on completion. So they can at times not be as attractive for investors because of the cash that's needed initially. So the developer has offset that by applying the free stamp duty incentive. To touch on the development itself, it's by one of our key developers, Investing PLC, who we've done a number of projects with, known for delivering high spec, high quality developments on time, exactly like this. It has a 10-year build warranty, 999-year lease, comes with a gym, cinema room, co-working space, rooftop gardens, and a concierge. Service charge is £2.99, which for those sorts of amenities is very low. Prices start from £230,000 for a one bed. At the time of recording this, we have one bed left. The rest of the units available are two beds, which are starting at £330,000. Both unit types offer great value given the rental appraisals that we're seeing. In terms of what the stamp duty actually does in terms of the numbers, you can see on the left-hand side, this is off a cash flow where the buyer has paid stamp duty. Stamp duty for me is probably one of the biggest barriers to entry into UK real estate because of how high the percentages are. Typically for international investors, they would pay anywhere between 7 to 9% of the purchase price in stamp duty. This is just money that goes to the government. There's no way around it. You can't mitigate it. And that's the end of that. You have to pay it, and you have to pay it in cash. You can't mortgage it. It has to be paid on completion. So for buyers, it is at times a barrier into entering the UK real estate market. To put that into perspective, if you're buying, say, a two bed in this development, for example, at £330,000, stamp duty is going to be about £30,000. On the left, you can see what the ROI predictions look like if a client pays stamp duty. So over a 5-year period, the ROI would be 94%. On the right-hand side, you can see the projections if a client doesn't pay stamp duty, so doesn't pay that initial £30,000, what it does to their return on investment. And over a 5-year period, it's 124%. So it's 30% higher, which over the 5-year period is an additional 6% ROI per year. The ROI is built up from the net cash flow position, from the rental income minus the mortgage, and the capital appreciation of the unit. You can see over a 10-year period, again, the numbers on the left, 196%, on the right, close to 260%. So it makes a huge difference on the basis that the stamp duty cannot be built into the mortgage. It is cash that is outlaid on completion. There is no way around that. So for the developer to offer this, it's a great incentive, as we can see from the numbers. In terms of where the development is, and then I'll touch on Birmingham as a whole, we know that location is absolutely key with any development, and this development ticks all the right boxes. In terms of where it's positioned, it's a mile away, so a 10-minute walk from Aston University, University College Birmingham, Birmingham City Centre, all walking distance. It's 5-minute walk from Birmingham New Street, and again, a 10 or 15-minute walk to the main business districts in Birmingham, the likes of Broad Street, the Mailbox, the shopping centre, where you will see companies like HSBC, Deloitte, PwC, all having huge offices there. You can see on the map how well positioned it is and how walkable it is to a lot of the main facilities in Birmingham. In terms of why Birmingham makes such a compelling investment case, Birmingham is the second largest city in the UK, a population of over 1 million people. It has major employers like HSBC, Deutsche Bank, Goldman Sachs, KPMG, all of which have relocated huge portions of staff from London to Birmingham, which they now call home. It also is home to Jaguar Land Rover, again, having thousands of employees that work in Birmingham. The benefit of having two different sectors, like the financial sector and the automotive sector with JLR, it means that from a risk perspective, it's not reliant on one sector, which is very good from an investment stance. In terms of high level Birmingham, what is going on there? There's a 17.6% projected rental growth in the build to rent sector between now and 2029. There's a 2 billion regeneration plan being pumped into the city, creating over 50,000 new jobs. And it's one of the UK's most popular cities with over 45 million annual visitors. What does this mean for buyers? It means it's a fantastic investment opportunity. That I touched on earlier, it's within walking distance of some of the major universities. Birmingham has over 80,000 graduates, and that's not different to a number of cities throughout the UK. What does stand Birmingham out is the fact that it has such a high graduation retention rate, around 50% of these graduates, once they do finish university, are retained by the city and go on to work for the likes of HSBC, Deloitte, PwC, Barclays Group, and become young working professionals. And that is the exact type of tenant that this development will attract, being in walking distance from all these major firms. In terms of connectivity, HMS2 is soon to launch and will connect Birmingham to London within 45 minutes. Now meaning that Birmingham to London is a quicker commute than certain areas in Zone 5 into the middle of London. Again, it just boosts the economy and means that from a tenant perspective, the demand is going to be there to live in Birmingham, in a growing city. I hope this gives you a bit of an idea as to Birmingham. You can see some of the facts and figures on the screen here, which I'm sure you've had a read through, but it makes for a compelling investment case, especially with a developer offering free stamp duty to clients. As mentioned, it's for the month of February that they're offering this. We have the 1 bed left. We have a number of 2 beds left. So if you have clients interested, you want me to go through cash flows with them or go through the investment case in more detail, more than happy to do that. Let me know how I can help.